right, so we are going to review Tuesday, October 4th. We're also going to take a look at two specific setups. We'll just back this up to yesterday. Oh, this is Monday already. Here we go. Excuse me. So we're going to look at not only what it looked like today on the algo, to see if I could have performed better, or if there's things I need to tweak before tomorrow. But also, I'm looking at two specific trade patterns that I'm noticing working quite often, based on a mixture between uh, the algos on the trade and perform, or sorry, the signals on the trade and perform algo that Simon shares in the trade and perform room. If anybody wants more information on the trade and perform room, it is paid room, and you can get access to Simon's screen and see something like this, or the premium members get it on their desktop. So I've got this on my desktop, and I've also added some of my own signals, like these arrows and these diamonds and the background colors and stuff like that. And the idea is I'm actually looking at ways that some of my old swing trading concepts might apply to day trading, now that I have the order flow signals. So these signals, the stars, the triangles, the orange bars, the green bars, the pink bars, the purple bars, all that, those are order flow signals, right? These are looking at the what's it called, the time and sales, as well as the footprint, and all of this info down here, like speed and volume and bid to ask ratio and things like that. And it's giving me that information in a signal, like a star, right? So I've taken that, and then I've also added some other signals, and some examples of those are these arrows here, the blue and the yellow, and then the diamonds. Some of them are inside that are white or red, and then there's also diamonds on the outside which are blue or purple, like this. Okay, and then there's backgrounds which show momentum. So pink is a sign of bullish momentum, and if it's purple, well, we won't see purple for a while, right there, that is a sign of some bearish momentum. So now none of my signals so far have produced on their own anything near, when it comes to like win rates, if I would just enter when the signal comes on, it's nothing near what Simon's signals are. These order flow signals are legit trade signals that work really often. Even if you do no more filtering, they work great, right? You don't really need to like improve them. They don't need any improvement. But what I wanted to do was, since I already had these other trade systems that I knew worked on a higher time frame, I wanted to apply them to this time frame and see what I found. And so what I'm noticing and what I want to watch for is when we have a combination of some of my signals along with some of Simon's signals. In particular, the ones I'll show you as they show up. Some of the ones that seem to be working very, very often. One of them is when you get when it's bearish. Now here it's bullish, so it doesn't work. But when it's bearish and you get a yellow arrow, and then within, either on the very same bar or the very next bar, you get an orange bar with a diamond. It's got to be all three of those things, right? The arrow, the orange bar, and a red diamond on the inside. As long as it's bearish, those tend to create really good pullback entries. Now here it's bullish, so it doesn't apply. The opposite of that would be a green bar with an arrow, but it also has to have that diamond when it's bullish. And what you'll see, or what I've seen anyway, is when all three of those are together, you'll get like a pretty consistent lift or drop, like with the trends. Let me just see if I can find one here. Going back to Monday, because I thought, oh, there's one Sunday night. Here, I'll show you. And then what I wanted to check on, I guess I'll do this first, and then when we get to Tuesday, we'll do the actual trade review. But what I want, let me just show you an example. They don't show up very often. It's a rare occurrence when they all land together. And what I want to know, and I want to look for today, is to see. So here it is without the green bar, but I think it's still good. And what I want to know is first of all, do I need all three, or is it okay if it's pink instead of green, or purple instead of orange? And then I want to also know is if the blue arrow is one bar before, does it still work as a big lift? And then also, when I'm not sure what the trend is, like here, it's pretty balanced, right? Pretty balanced here. When it's balanced, what I'd like to know is, can I look at the wave that the rotation that's coming into the signal, right? So if this is the signal, I want to look at the wave here, or the rotation that comes into that signal, and I want to know if the top or the bottom, if it's the inverse of that, if this first bearish bar, I guess in this case it's this one, because it's the beginning of this wave here, which actually is a wave down, right? I want to know if I want to know if the algo signal on that bar may influence whether or not this rare but consistent signal lifts in the case of being a bullish signal or not. Because what we saw today was it was bullish, and then it started to flip bearish. We got a signal just like this, which indicated a bull move, and it immediately failed. But what I'd said is, if you looked up today at the top of that rotation down, we had one of these orange bars, and what you'll see, and these orange bars are based on the trade and perform. They are the same as the trade and perform signal that in the room is known as the POC above or POC below. And in the room there are little squares inside the bar. I find it easier to see it with a color bar, so I turn them orange for bearish and green for bullish. And what you'll see, like I said, this will make sense in a minute once we start looking at this bar by bar. But when these orange bars show up at the apex, so here is an apex, and here is an apex, right? When they show up at the apex, what you generally find is that they act as pretty good resistance. Now this one didn't even get tested here, right? Until here. And then we just got this rotation. So that one, I would say, didn't work, but they got an immediate, the entry did though, right? They got an immediate drop. And I want to know if this diamond is also relevant here. I'm not sure. If the purple or it has to be red, I'm not sure. But then if you see this one was a lower high, it created resistance. We got another sign of aggression getting us another short. It created resistance. This one got broken, but at the apex we got another one, right? That market comes down, comes back into this resistance, doesn't quite meet that one, and then finally gives us the signal we were looking for, which is the arrow with the diamond, and preferably a colored background that's not white for bullish, right? So either green or pink color background, so it could look like this as well. And what I'm noticing is when we've got both the arrow and a diamond, and the color is orange or green, so here arrow, green, diamond, right? Or here arrow, diamond, but not green, and it gets beat. No arrow, but orange and diamond, and it works. No arrow, diamond, doesn't go anywhere. Now we get them all arrow, color bar in the background pink, and diamond, and it goes up, right? So I want to know, how do all of these signals have to be there at once, or are there conditions where maybe only two of them need to be there? And then also, the times when this fails to work, I know are generally when it gets very bullish and when very bearish, and when the bears have a lot of momentum. One way to know that there's momentum is to look for these orange bars and to see if they're producing resistance, right? And so I think in this case, the highest orange bar was here, right, which was right there. Or sorry, the lowest, I should say. Dyslexia. And then the closest orange bar was in this location at the blue dots, which is the 3A POC, VPOC, I should say. No, POC is right. Yeah, same thing. Um, when we came down, we got this little lift here, and this wave started here. This wave down, right here, started with this purple bar. It was not orange. And so what I'm finding, I believe, is that this combo of signals can break out as long as this orange bar or this orange bar or this orange bar is not immediately above us. So this is the wave to the low where the signal was. The apex of this, none of these bars are orange, meaning that we can attack this. When it's orange at the apex, what I'm finding is that the bounce is weak. See that? So here, orange at the apex, bounce rejected. Not orange at the apex, bounce gets a little bit of an extension, right? Orange at the apex, any bounce is weak. No orange at the apex, any bounce, potential extension. So that's a pattern I've been noticing and have talked to my coach about it. And now he doesn't, advocate adding new signals to his system. His system is perfect for him, just the way it is, and that's cool. That's good. But like I said, I would like to figure out if I can add any alpha by looking for these arrows and when they show up here. But the question is it okay that there was like purple here, which is a sign of momentum? Is that actually okay as long as it's not an orange bar at the apex here? That could be, right? And also just, is this signal consistent? So let me just run through here. So here's an orange bar. This one came right after an arrow that's yellow. So that one should be a cell, and it works, right? Whoops. So this one works, which is there's no diamond there, yet it works anyway, right? And you can see that there was clearly bullish momentum. And then if you look back at that wave started with a bar that's not green. So that's consistent. Okay, we've got just a green bar, just a diamond, not enough. Now we get a blue arrow with a diamond. This one's also got a star. Okay, that should be a signal, right? It's two of the three. Well, actually, it's three of the three. It's just this diamond instead of the other diamond. So then we look at the top of the wave. Well, this entire wave technically started with an orange bar, but look how far away it is, right? So this little rotation did not have an orange bar, and we ended up breaking over it. Now, it did print an orange bar down here, which is interesting, and that bar got beat, right? So in this case, it may have still worked even though it did have an orange bar up there. But what I'm guessing is that when it gets back up to that level, it's probably going to reject on the first try. It doesn't even get there. Okay. Now this one is technically an entry simply because it got underneath this green line and came back with the green bar. It's just a different setup. But again, there's no orange bar here, making that hopefully easier to retrace. Now we start to get orange bar, green bar. This is a attempt to get momentum started to the upside, which fails. See that? It fails right here, right? Gets underneath it. So now all of those guys that bought here are trapped. And so what I would expect is that they try to reject off of there. Now we get just a purple bar star. That's an okay entry, but in this case I wouldn't take it because this is bearish. We get an orange bar. Okay, let's take a look and see where the DVP is. If we draw the volume profile to this high and off the high, we can see we've got a volume build there and a volume build here. Okay, so now let's delete the DVP so it's easier to see. And the idea is, here, let's take away this. The idea is once you've gotten that wave to stop, now I know who's in control by who controls these high volume areas. So let's see what happens. We get under both of them, we come back up and get an orange bar off the bottom one. That should be bearish. And we do get a little extension. Okay, now this is a bull trade. We got underneath the green line, came back with the blue diamond, even better that it's green. That should be bullish. But we have trapped buyers, right? they might reject here, and they do. So this is the fix basically that I need to. This is where I made a mistake today, and this is the exact same situation that just happened yesterday. And like I said, I saw it yesterday. I wasn't trading yesterday, but I saw this in my review, and I didn't put the pieces together to identify what it was that I was actually looking at, but I did notice it. And the what's going on here is we've got volume at the highs of this move. All the volume is at the highs here, and then when they try to break down, they put it in volume above the lows. It's not at the low, right? So when that condition is true, especially if bears have trapped buyers anywhere above them, like this and this, right? So lower highs, let's just say, or maybe even a trap might be good enough. But in this case, what I'm looking for here, I believe, is orange bars for sells. And then I need to remember that because we develop volume underneath both of these point of controls, both on the way up and the way down, all the volume is up here. We've now developed volume below it with an orange bar. The chances that buyers will be able to break through this is low. Therefore, even though this is a high odds setup in every other situation, like this, same exact setup, got underneath the low, came back, got a green bar, it usually lifts. Well, that's because the sellers probably, or the buyers probably aren't trapped. If we look here, we have, whoops. Let's see if I'm right about that. Because this one, the buyers do not get stuck. So we have volume build here, volume build here. Okay, I can delete them because it's a lot of lines already. All right, so the idea is get above. There's no orange bar up there. There's no orange bar coming down. They try to develop volume underneath. Buyers show up. They have no resistance here because there's no, the orange bar is way back here before this move. And so this is easily traded through. Boom, until you start putting volume point of control with orange bars. Then now all of a sudden that's resistance. See that? So just now the opposite should also be true. If this is true, if this is consistent, the opposite is also true. When you go down to a low and you've got a green bar that is above the points of control for the low and the high, or sorry, the low, the wave to the low and the wave off to low, off of the low, it should be very difficult to get underneath that. So we'll watch for that as well. Here we just, this guy was underneath it. We have this green bar above it, but here I'll show you, it's too many lines. So here, we have a new low here, right? So into the low, off of the low. Okay, so to do this, to make this work, we would need a green bar to show up above these volume builds. Now this one's got a lot of volume up here, so that might fail, but so this one's below. It happens to work because it trapped this low and came back in, right? Totally different trade, but in this case, it's not a trade like we're talking about here. Then we get this green bar here, which closes above both volume builds, and that one turns into resistance, right? And like I said, I think the reason for that is, first of all, we have an orange bar take over, right? So it was bullish, and it could have been bullish, but once the bears come in, it might be over. But the other problem with this is that there were, first of all, buyers stuck up here, right? Acting as resistance. So on a higher time frame, we have a problem. And then on this time frame, while the POC itself on the wave back up is down here, you can see that there's plenty, it barely had more volume than this. So you could really say that the volume build started here and came all the way down to here. And so what you really need is a green bar that closes above this, which does not happen. So that, it's not just the POC is what I'm trying to say. It's actually the volume build. And now what I'm guessing is that these are now going to, once you've gotten underneath them with volume, now they're probably going to act as resistance. Let's see. So normally this would be a long because you got underneath a low, purple bar, star, with the diamond even makes it better. This low should be, in other words, should be safe to put your stop under. But where are we targeting? Well, we've got all these trap buyers here, so that's probably my target. Let's see if that's where we go. Yep, right there. Okay, and then out it goes, right? Because it's bearish, we're just counter trend trading, right? The algo doesn't know if it's bearish or bullish. It's just like, hey, here's a pattern that you know works most often to get you back to resistance. Well, where's resistance? Right here. That's exactly where we go. We reject, right? Notice that this bar has aggression, which is the diamond, or the stars, and it interacted with this volume build. That makes sense. They would aggressively defend that, right? So that's still bearish. Now we trap underneath here. Oh, this one isn't going to count because it's gotten a non-purple bar below. I would normally not take that, and that one works beautifully. So that's interesting. There's no orange bar here, right? It was a star. So that I may adjust that rule, because if this is going to work regularly, as long as there's not an orange bar here, and that might be okay. But that's interesting. So this one cleared out all the sellers basically, and then they rolled down a little further and then ripped back through them. Now let's check the DV. Let's draw the volume profile and let's see to the low, off the low. Okay, volume build here. There's a little one above it, but that's okay because this volume build is actually higher than that. I'm going to get rid of this earlier one, although it probably is still relevant. Get rid of the volume profile so there's not as many things to watch. And so now we're looking for green bars that close above both of those. Well, that's right here. So that should be a buy. There we go. So far it's like 3, 4, 4, but if you identify that there was volume above the other one, it's 3 for 3, because it would not necessarily be a setup. Now remember, this is not orange, so we should more easily get through it. Okay, we got a yellow arrow all by itself. That's not a signal. Yellow arrow with just an orange bar. I don't have metrics on that signal. It needs a diamond as well, I think. But it isn't an apex. And that one I would say does not work all by itself. So that one maybe is 50% of the time maybe. And then we've got diamond, blue, and green, but we're not at support. We're up at resistance. It does give you a scalp. Where does it go? Back to this same area where there was a volume build before. Remember, this is from way back here, right? Where there was that orange bar where they trap buyers. Buyers are trapped there. Okay. They get a green bar. Guess what? This green bar, hard to get through. This green bar, hard to get through, right? They're going to have a hard time pushing lower here as long as we keep on getting green bars at these pivots. See that? Anything with these green lines extending across that have green bars as well, they're gonna act as support as long as it's bullish. And it's bullish. We know it's bullish because it's pink. So up, down, they can't break it. Up, down, they can't break it. Up, and then if they go down, they're gonna have a hard time breaking this until they print an orange one, is what I'm thinking. Now this one technically printed an orange one right here. Right, so if you look back here, what you would have to do then is see where the volume was. Up, down, way up there. You would need an orange bar to close below this line, which it did not. So even though there's an orange bar there, it's not below that VPOC. See how if this one was orange, it might work, but instead they got a green one. So that lifts, right? And you can do that on all of these and see that it's just not, they're not getting rid of it. Now this orange bar does have an arrow, but it's not a pivot. It doesn't have this little flag with the red line. So it just gets trapped immediately, right? They try to get really aggressive, but it's not in the right spots. They get trapped. This one's just the purple bar with the diamond. They get a little bit further. They print another green bar. Guess what? We're probably going higher, right? That becomes a pretty strong resistance or support, I imagine. When they try to pull it back again, they can't break this. They print another green bar. I'm not going to sell that if I see that, right? So these green bars are becoming not only pivots most of the time, not all the time, but most of the time, meaning they're probably okay places to buy if it's bullish, but it also means that the very next pullback is probably not going to break it, and when it does, I should pay attention. Now here we have arrow followed by diamond, but it's not a pink or an orange bar. So let's see if that does anything. Nope. So that's not enough, especially when you have a green bar here. Not going to take it. No short. We get another green bar at a pivot. Not going to short this. This is not a short in my opinion. See that? Comes back. Now, no green bar. This is the first pivot for a while that did not have that green volume shift. I bet that this might work. Look at that, right? So there's definitely a pattern here. I don't know how often this plays out. It might only work when when there's a lot of momentum. But in my opinion, if I could know not to short any of these highs, like I've been using these pink backgrounds to tell me that, but here we got pink here, and it still worked, right? Now we did get the nice bright pink right before, and that's often, see how this one didn't end in bright pink? So these aren't very good. The bright pink in particular that ends immediately and turns into an aggressive sell signal is usually a pretty good scalp. Like this is usually a pretty good scalp if it was at a high. This one's not at a high, so you have to wait for that high to get broken, and then this is the scalp. Right, so let's do the same game here. The high, wave to the high is here. It's a small wave. Wave off the high is there. The volume builds on these are pretty much overlapping, and it's right about there. To be really bearish, you'd need an orange bar to close below that. That one does not work. So if we're trading this, and we're looking for that setup, I've made this mistake repeatedly before I ended up seeing what this pattern was, and that's it. It's not just that it interacts with the POC, it's got to close below the volume build of both the wave up and the wave down if you're trying to turn it around. Because while this is a shift in volume, the bigger time frame, right, the rotations, because remember, this is a Renko chart, right? So this tiny time frame from one bar to the next, that's what the order flow signal is telling me. It's saying they are shifting volume lower on this tiny time frame. Well, this rotation here is technically like an 80 tick Renko, right? It's as if I got, or maybe like a 40 tick Renko. It's however long this is. I don't know. I went from 1100 to 11135. You need a pretty big Renko chart to have this be one bar and this be one bar. But if it was, what you would probably see is an orange bar, right? And so that's what made me realize, hold on a second. If all I'm really looking for is volume shifts, then it's not going to make sense just to sell the next bar that's orange. I need to have a volume shift on this time frame that closes below the volume on the volume shift on the higher time frame. So if all the volume was down here at this low, they need to get underneath that, right? And then they need to come back up and reject off of it. Now, like I said, I would short this and then I'd get stopped and they would go without me. And I was like, what the fuck? Right? It was really frustrating. And I mean, it's fine. Like sometimes you're going to get stopped and you have to come back in, and that's okay. But I believe the problem here is I was not respecting the fact that on a higher time frame, this in and of itself, this is a volume shift only when we get below that volume. So I want a volume shift on the smaller time frame that closes below the low of the volume shift, or below wherever the volume was on the volume shift on the higher time frame. So if you want to think about it like micro, what you'd be looking for is an orange bar, right, on this time frame where you had you'd have an orange bar on this time frame, like at a pivot. So here, we had one back here. So we had an orange bar, or we could do, well, let's keep it consistent. We'll stay with the short side. So orange bar at a pivot, right? So here or here, right? So if within that orange bar, as we're trading inside of these orange bars, where they eventually close with a volume shift, if inside that bar, we also had volume breaking down below it, right? Like on a smaller time frame. I mean, not on that same bar, but from that same range on a smaller time frame, if we had volume break below it, it would be a sign that on the smaller time frame, we're probably going lower. Okay, so I want those time frames to line up. In other words, I want to see the volume shift at the pivot, at the high or at the low pivot, right, occur, and I want on this time frame to see a volume shift that closes the bar beyond wherever the volume build was on the shift. And I know that's a little confusing, but all you need to know is how to do it, And like I said, the key is where that green or orange bar shows up. And so here, for example, let's do this one again, just so you can see how this works and why the first one didn't work. So if this was the wave to the high, and this was the wave off the high, the volume builds of those waves occurred here and here. So now I can get rid of this to simplify things. So what we're looking for is we need to get underneath that volume. So we need to get down here. And then we need a volume shift to the short side. In other words, an orange bar to close below both of those. That happens right there. So this, while it looks like a decent short, is actually not as likely to work as this. While the location is better, this one will break down more often than this one. This one will sometimes come up and sweep and then come down, whereas this one will usually hold. Okay, so let's keep going here. All right, now we've got 2 of the 3 again with the arrow. We got a blue arrow. We've got a blue diamond. There's no colored background here. We look at the top. We had an orange bar at the high of this wave, as well as right here. I don't want to be buying here. Now here it actually worked, but I'm thinking that usually this will not, right? 2 out of 3 times this is failing, even though it's trapping underneath with the purple bar and coming back with a diamond and an arrow. Like I said, I'm pretty sure when there's orange bars up here and when you've trapped traders up there, the likelihood that this breaks through it is lower. It doesn't mean it's never going to work, but I'm thinking that's the first time I've seen it work. Let's say it that way. So we'll see if that continues. All right, so now let's make sure that this DVP trade is still working. Wave, you can do it down here. Wave to the high, wave off the high. Volume, build here, volume build here, right? That was off the high. So you would need a orange bar closing below both of those volume builds. You don't get it, right? Where I was getting stuck is I was shorting this because it's interacting with the POC of that wave down, getting stopped, taking this short because it interacted with this volume build, getting stopped, and being like, what the fuck, why isn't this working? So whereas what I should have been doing is identifying that this one didn't break the high. Well, first of all, this one's definitely not it because it didn't even break underneath the wave to the high, right? And then this one is definitely not it because it didn't close below the wave to the high. And so when they fail to do so, what it means is it's not bearish. So now green bars and stars are probably the pivot, right? When aggressive traders show up and support the trend, you're usually going to get a continuation. It's hard to buy high and sell higher. It is. It's really hard. But if you want to know how to do it, you need a system that tells you when not to be short, right? And like I said, what I was doing, and what I'm still doing, I guess, is I'm watching for these pink here, these pink backgrounds, and saying as long as I see those pink backgrounds continuing to build, like I had 1, now I have 2, and I get 3, I think. Yep. Now I'm not even thinking about shorting, right? So I would totally skip these as long as they're going up. But you can see when you have 3 and then you have 1, chances are you can get a scalp there because the momentum's actually decreasing. The problem is that here you had purple, then you had 2 pink, and your primary sell is here, and I don't get it till here. Is that a problem? No, not really. But the other thing I could have seen is that we got underneath this green bar. We broke down below these 2 green bars. And so right away I should be suspicious here, which is why I said this one's not very good. It just happened to work. Probably hit like an area that was important for some reason on a higher time frame, right? Happened to bounce, but I'm thinking that this is not your high odds setup. It just happened to work there. Probably just because it's so bullish. You know, they tried to get it underneath and they just couldn't even hold it underneath this channel. And but the important thing is to know that usually when you get this pattern of green bar, orange bar, green bar with a diamond that gets broken, this in particular, that I believe I saw today, that you can mark off this area, and whoever takes this is going to continue in that direction. So again, I know I'm going kind of fast for those who aren't used to this, but I'm trying to go as quick as I can so I can get to the day. Because, like I said, I really do want to return to Tuesday, but I think it's important to see how Mondays. There were a lot of cases where Monday was literally the exact same pattern. And so if you studied yesterday and you were looking at the same thing I was, you would know that this pattern breaking down, it's not necessarily bearish, which is where I was getting fucked up. I was like, oh, bullish signals getting broken down must be bearish. No, the way I think, because the problem with that is that it's been bullish, right? And so the breakdown of these high odds order flow signals, what I need to do then is just mark them, like note them, observe it, and then basically say this area becomes a line in the sand. If sellers reject off of it, we're going to go lower. If buyers reclaim it and bounce off of it, we're going to go higher. And we saw literally the exact same thing this afternoon. Buyers get above it. Sellers try to take it with aggression. That's what the star is telling me, and the diamond too. Lots and lots of aggression here. They beat it, right? So I wouldn't buy this, but this one may be worth a try. And if you don't get that one, the next signal in that zone is probably good. So in other words, if I wanted to, I could say this area is where I'm looking for trades. Right? Anything that interacts with that push out before it starts to get pink, like this one or this one, the pullback. See these triangles, like this. When it's bullish, you can buy anytime it basically. If it's bullish, which starts here, you can. It doesn't happen very often, but you can buy off of these triangles. So this is a triangle. If it's bullish, this is a buy, right? So here's a triangle. It does not continue higher. Don't do anything. Here's a triangle. If it gets back to here, it's a buy. Now, once we retake this triangle, pulling back into that triangle can be a buy right there. That becomes a buy when it closes. That's how you get this, right? This triangle pulling back into it and bouncing right there is a buy, right? This triangle here, same shit. Until it's not bullish anymore. Those pullbacks, here's another one. Until it stops working, and then they reject it, it's going to keep working. Okay, there's where they reject it. See how they got under it? So they go higher. They try to come back. This one fails. See that? So we're buying pullbacks into triangles. Simple momentum trading, right? Super simple momentum trading. See a triangle, which is a sign of a continuation. Pull back into that zone, buy it. If it's an algo signal, buy it, right? Once it stops working, this triangle was way too high. They came back into it. You got an algo signal, and they crushed it. Like I said, in my experience, this is where you stop being bullish. Until you get another a sign that bears are trapped. So let's see what happens. Do they go to the next triangle? Where's the next triangle that's been untested? This one. Let's see if they head down there. Yep. Interesting. So this one got beat. They go down to the next triangle, and then they just leave it? Yep. 2 chances. They negotiate this area back. They eventually need to reclaim this triangle. See how long it takes? And then finally they take it, right? So this is where people get fucked up when you're trading momentum. This is hard, right? If you're trading mean reversion, this is hard because you short this, right? And in fact, this one had that arrow with the orange bar and a purple diamond, and it didn't work. It did not become the apex. So that's one of those ones, the rare cases where that signal didn't work. What did we say when that signal doesn't work? It's not bearish. And I mean, if you looked at this, you'd probably know that it's not bearish. But if you know of a signal that works like 70% of the time and it's not working, you're probably fighting the trend, right? And in this case, what you saw was momentum higher. The diamond is a sign of momentum. And so that becomes a pivot that the sellers need to get under, just like the triangle. And so they try it again. So now we can move it down here. Now this diamond is what sellers need to stay under. And so if they can't hold under that, they try and they fail. And now it's over. Sellers are trapped. So let's do the other way. Let's do the, let's do the, did I get that right? 24. Okay, sorry about that. I hit the 4 hour and that's going to have to reload. So let's do the other way where we do the volume profile. Draw the volume profile to the high. This is the easy way, right? Draw the volume profile to the high. Draw the volume profile off the high. The only way we can be short is if we get an orange bar underneath both of these volume builds. Here's volume build number 1. Here's volume build number 2. Now, notice again, there is another volume build down here. And I think that's going to cause us a problem. Yep. We got volume underneath both of them, got an orange bar. That usually is a short, and it does not work, right? This one also does not work. Nothing's 100%. And here's an exact example of when it doesn't work. What does that mean? We are not bearish. If this was the high, this is the lower high, right? When the orange bars become the pivots, it usually turns the market. When the orange bar becomes a pivot, it usually turns the market. When it doesn't, when you can just rip right through them, this one took like a couple tries, right? But when you can rip right through them, you know, I need to remember that I need to be okay missing this and missing this and missing this, because I'm going to take way more stops fighting this than I will get paid when it works. And I might not even get a signal when it does, right? So instead of shorting, getting stopped, shorting, getting stopped, shorting, getting stopped, missing and getting tilted, and then shorting and getting stopped, right? Instead of doing that, I just have to start when I see this, right? I like this kind of action, and we're just not rotating back, right? So like here we had rotations here, like we're inside of the channel more than we're outside the channel. Now we're outside of the channel more than we're inside the channel. Inside the channel looks pretty good. Looks like it could be balance. We get outside the channel again, right? Once we get outside of the channel, you might fuck up this one, but you gotta stop fighting it now. When that doesn't work, you might actually get some points off. But when that stops out and you get outside the channel again, and that orange bar failed, you're usually not even in balance. Not only are you not bearish, you're probably very bullish. So now you gotta find a momentum technique or just stand back. And like I said, the easiest momentum technique, find a triangle going in your direction, buy the pullback into that triangle, which happens right here. And that will give you the pullback, right? So that's the adjustment that I need to make, is I need to make sure that I pay attention when these orange bars or the green bars are failing. If the orange bars or green bars are failing, I should not be trading in that direction. It's really that simple. I might need to take one stop to make that adjustment, right? But then I can get back in when it's going in the right direction. So if I knew at this, where was that? If I knew right here that it was time to stop shorting, right? I might have taken this trade, gotten 15 points. My runners get stopped out. I'm like, oh shit, that was an orange bar at an apex. We just got stopped. Don't be bearish. Skip this, even though it looks really good. You know, don't look for bears here. Skip this. And then the green one I can buy. In fact, I could actually buy this because it's green. And I know we're not bearish. And it works. The green bars will be good buys as long as they're at location. They're going to be good buys in balance or in bullish markets. Hold on. Hold on, guys. Just got to answer this. All right. So, yeah, you can once we know that one side of the trade is when we have high odd setups that aren't working in one direction, I need to remember to stop taking those trades, even if they appear to be working again, and instead take their inverse, right? Trust the green bars here until they stop working, even if we get a roll back to the. This is just an opportunity to get long at a better location until a green bar breaks. Notice there's no green bars getting broken here, right? So in other words, like we said before, since this rotation started with the green bar, I should assume that that low probably holds. And if it does get broken, it's probably going to get trapped back in. This one started with the green bar. I should probably assume that that green bar holds. There's no orange bars at these apexes. See that? No orange bar, no orange bar, no orange bar at the apex. So any of the sellers. Oh wow, hold on. Sorry guys, I'm getting messages from. I just got to deal with a family matter here for just a second here. All right. Okay. All right. So yeah, that's the main adjustment, right? If I would have thought about that yesterday, I would have been able to take this trade with the arrow, diamond, and green bar, and avoid this one, arrow, diamond, green bar, star, or orange bar, star, right? So like this is normally a really strong trade, and technically when this gets trapped and traded back in, that's still a sell as long as it's balance. But it's not balanced, basically. It's bullish. And so this is clearly a buy, as long as it's not bearish. And I can just ignore all of these sell signals. And then this one is a trap. See, you got up here, trap back in, got an arrow with a star. If it's balanced, it's going to work. Okay, now shorts are starting to work, right? Do we switch our bias? No, not until a bull trade breaks. Oh, wow. Okay, so yeah, as sorry guys, this drama, totally non-trade related. Yeah, so I would need this one to fail, or this is a trap back in. I would need this one to fail. Those are both buy signals, right? And it doesn't mean I can't take the scalp short. I could, because it's such a high odds trap. And it's inside. We're back inside the channel now. We got inside. We see how we broke into the channel. You don't want to short this because we've gotten outside the channel and it's been bullish, right? Bull trades are working, so you don't aggressively short. We cut into the channel, and so this is a little bit risky to take that buy. But if this high odds setup does trigger right here, you can take that back to the other side of the channel. But the primary trade should be to long off the bottom of the channel because it's bullish. Now note the pink has disappeared. We've stayed inside the channel. Bulls have not lost a trade yet, not a high odds one, but we once again get a trap trade where we trade above a red line and then come back down with an algo signal. That's probably good enough to take. It does a little bit of something. We get the arrow with the diamond alone. It's not at the right location. It's not green. It's not pink. It gives us like 10 points, and then it traps back in. This should be a great long here, because not a single good bull trade, like a high odds bull trade like this, has failed at location, and this bear trade is struggling, and it should have been really good. So this is the better trade. I know that's a little confusing. Ooh, and that one doesn't work. Well, it does. It gets you your 15 points, and then it rolls. So let's see. Did I miss a DVP trade? The high is right here. Draw volume profile to the high, off the high. Ooh. Volume build down here. Volume build up here. So because this volume build was at the lows, here, let me get rid of this. Because this volume build was at the lows. Oh, hold on. Volume build down here. Volume build up here. Hold on. Sorry guys, I keep getting interrupted. I just need a second here. So we got volume build at the low, right? And then off the low, we had volume build at the high. What this generally creates, I believe, is a balance zone. And technically, you could trade it, right, by shorting up here and buying down here, I believe. But generally, you shouldn't be bearish unless you can get that orange bar to close below both of those. So let's just see. Okay, no orange bar, but that's a star. So this is a scalp. There's the orange bar right there. So here's probably where everything changes. Wow. So they give you a little bit, and then they jump back up. Now the thing is we hit a new low here. So you would have to then draw this again to the low, and you'd see you get a volume build here. So a green bar above that, and then off the low. Yeah, that's basically almost overlapping right at the voodoo range level. So if you can get green bars above that, now it's a long. But you can see that because these volume builds on the move up and the move down, I guess you could wait for this and use this as a move. What if you use this as a wave down? I wonder if this makes more sense. Yeah, so now it's in the same. See, now it's down here, and so remember this one was this one to the high. Here, let's take this whole thing. Okay, so now let's say, did I get a short below this volume build or this volume build? And now clearly, the short is this. Okay, so that's clearly the short, and it just doesn't go very far because you probably run into support. So that's the short, and then off the high you need to get a green bar that closes above that. Oh, you got the scalp here, so the star gives you a scalp. Now this one is below one of them, but not below both of them. So that's probably going to be balance, I think. Yeah. Green bar barely closes above both of them. That should be good. It does work. Not for very much. They trap underneath it. This should be good too. Yeah. Sneaky. Sneaky fuckers. Sneaky fuckers. So they just you just needed to try it a couple times and identify that the shorts were like once this guy gets beat, you've got to flip and think of the fact that we've been bullish this whole time. They have a green bar at the low now, so that should be stable. This orange bar now gets beat. And again, the rule is don't be short if that's happening. And now we need to develop volume above, so you don't take this one. I wouldn't anyway. Even though normally that's a good short, but the fact that we're beating orange bars suggests that momentum's to the upside. And now, as long as this holds, we're basically at least balanced, if not bullish. But what we really want is a green bar that closes above this. And that barely happens here. It's just so close. See, it's like on the line, right, with this one. There's so many different bars here. That took both of them. Well, there was a line right there. And so that works, but it gets stuck at this volume build. And so this, like I expected, gets a little bit of balance. Then they try to trade under it, right? They come back up with a star, and this is diamond into diamond. So that's a good trade at location, and you get a monster move, right? And then once again, once you see this, stop taking shorts. And where do you take longs? Well, take longs into triangle pullbacks. So mark off a triangle, look for an algo trade in there. That's your high, that's your long for the continuation. Right? And that's like, I just don't know. The only other way to trade momentum with the system is to look for trapped traders. So for instance, this aggressive guy, if this was balance, you'd be like, oh, maybe I'm gonna rotate back down. Well, it's not balance because look, we trapped this guy down here. See that? And we know that we developed volume above the volume point of controls of the wave to the low and the wave up back off the low. So this guy's been trapped. This guy's been trapped. This guy's, oops, the orange one's been trapped. All those guys are trapped. That, it's going to be really tough for for sellers to break through that. So when you see this, you know you're only going to go there most of the time. And when you don't even go anywhere, that's the closest thing to a breakout as I'll take. It's got to have a trap trader at least, if not more, down here. Preferably with a pullback and a bounce. And then we need an attempt that gets immediately busted. And this is for me a scalp. I'll try to get 10 to 15 points here and then wait for these. The triangle pullbacks are better. Mark off the triangle, wait for the pullback into that. When it gets an aggressive buyer to show up, take the trade, and then you're going to have to hold through some stickiness, right? So here's that really high odds trading signal again, but we know not to take it because shorts aren't working. It's not a reversal. It does not work as a reversal. It's like you've got all these signals firing at once because they're trying really hard to fight it, but it doesn't matter because there's so many trap traders. If it was bearish, this would work. So what we have to think about is rather than being anxious about getting the top, observe it, see that it doesn't work, and don't be bearish, right? Like I know it sounds simple, but that's the right way to think about it. Don't be like, oh, it could be the top. Like maybe I should be first. Like no, don't be first. Like wait for them to develop volume below, just like we're trained, right? Don't short these, because they're not going to work very often since it's so damn bullish. I've done my best to like color everything to make it clear, but I still make the mistake because I've seen this work so often. It's just not going to work here. Right? It's not going to have, that's why most of these trades have like a 65% win rate, 70% win rate. 25 to 35% of the time it doesn't work. Guess where most of those are? They're right here when you're fighting the trend. When it finally breaks, will it probably turn with one of those trades? Yeah, but you don't want to have to be wrong 8 times to be right on your 9th, That might be a little bit excessive. It's probably more like be wrong 4 times and be right on your 5th. But like this, like pink bar, orange bar above the channel, like that's usually a really good short. And I get frustrated when I miss it, especially when it's at a voodoo range level. Like it's like, man, why wasn't I short? I think that's okay if you're not short there, as long as you weren't shorting this and this and this and this, right? Then like miss it. Who cares? Wait until a green bar at an apex gets beat. Now we can start thinking about shorts. Right? Now this one makes sense. So who cares if I miss this when it sometimes takes your stop and then runs anyway? Take this one for the scalp, and then if it happens to roll, sweet. Right? But miss all of this garbage. Unless you just want to buy dips, like I said, with like triangle bounces. Like that's cool. Or like wait for them to get trapped and then take the algo signal off of it. That's fine. As long as you think you have a target up here. But I mean, like I said, I get down on myself when I have these levels up. I mean, look, you guys, this is the close yesterday. Like I literally had the fucking like line on here. right? That I share with everybody. And when I see that, and then I'm like, fuck, why am I not taking that trade? Like, that's got to be, that has to be okay with me, because sometimes this takes three opportunities. Like this one happened to work, like all three times without taking out a stop. It's not unusual for this stop to get taken out and then they roll, and then this stop to get taken out and then they roll. That's not that rare, right? Especially going down. Doesn't happen as much going up, but highs are hard to hit. So if you must commit, if you hate getting stopped during momentum moves, find a way to know when it's doing this, whether it's this algo or something else, right? Find a way to figure out when it's doing this, signal it to yourself to stop fucking shorting this, and then totally accept that you might miss this trade, or even this trade, right? Probably you'd miss one of them and not all of them, but you might miss all of them. But then know that once these start working, now we probably have a two-sided market again. Now you can start thinking about going both directions, and you can go back to the mean reversion strategy. But when you're doing this, if you're trying to take every mean reversion short here, you're going to get smoked, right? It's not until one of those work, and a really good way to see that is an orange bar. Well, now on Simon's, if you're in Simon's room, this is like a bar with a white square on it, right? But I've changed it to orange because it's hard for me to see that white square. So when you see that POC under POC, it's a POC shift. Here the yellow is the POC of the bars, and the volume has shifted, and it's an apex, right? When those hold, or when they trade above them and then immediately trap back in, especially with a lot of volume, which is what these purple diamonds are on my charts, that is a clear indication that we're at least going to have probably a two-sided market, if not bearish. And so what you end up getting is pivots with orange bars like this and like this, or pivots with big volume. And those not getting, when the market can't get behind those, it's a clear indication that you're no longer, the bullish momentum is dried up. You can see on my algo, I've got all this pink here that disappears, and that's what has been alerting me to it. And so I know, but if you get too zoomed in, it could look like the pink has disappeared here too. You have to wait, right? I need to actually see a trade work with no pink like this. So I won't usually take this, even though there hasn't been pink for the way up. So what I'm trying to say is that this up move with no pink, even though it looks like they trapped that star, this is probably not going to get supported. And once we get under that, I can start looking for shorts. So now I can take short signals, which is right there. So that's my first signal. That's the short, right? I mean, I know it looks simple, but like in reality, when this takes, 3 hours and you're like waiting for that short and you don't get the pullback you want back into the bottom of the channel, it's really tough not to take all of these. And I'm telling you, it's smart to not take all of them. And then the other thing that sucks is if you've been missing all of these longs, these like breakout buys, right, that we're not really supposed to take, and then you see like a setup, like a green bar here, and like, oh, here's my chance to get a scalp, that one's probably going to fail, right? Because everybody has been waiting to get it. And so one of them's going to fail. And then once it does, now the stars are, like, I know this one technically got a scalp, but these stars should now be ignored, and instead we should be looking for opportunities to short when they break down. Like that. Or like that. And again, my purple is exactly the opposite as the pink. So once I see purple, especially multiples, and especially when it's bright, it means the momentum has like suddenly become really like driven on the bid, and therefore these aggressive buyers are not going to get any follow through. Another way to think about this is that on a higher time frame, all of these traders are trapped. So the best we should expect is pushes back into that zone at best. See that? So I know this is a good signal, and it's fine as long as you're far enough away from the trapped traders, but don't expect it to go to the high right away. A lot of the times it's going to chop around in here. See that? So like if you take the scalp, take profit when you get back to the trapped traders. Don't just expect to run through them because it's been bullish all day. Like, no, they're fucking trapped, and they were aggressive and greedy, right? These guys were bought up here, like, after this? Come on, right? Like, all these guys were greedy, and a good number of them got trapped. Yeah, they're not going to just plow through them. I'm not saying they can't, but most of the time what you're going to need to do is trap shorts because you got trap long, so now you have to trap shorts. Note at the bottom, there's no stars down here to the downside and no orange bars on the downside. So there's no big volume. There's no big aggression getting trapped at the lows. The only down star is right here. In other words, we need to get above this level before we should even think about holding runners. Otherwise, this is all just mean reversion scalping across the channel. Now we've gotten above it. Now we've trapped shorts. Now we can start going back into the momentum again. Notice it turns pink, right? And now I didn't get any signals really here to buy, but this is the kind of move you need to start buying dips again. So hopefully that makes sense. Interesting, they came back up to this level. Let's see this guy up here, who was the aggressive seller that got it all started. They came back up to him. They traded above him. So it looked really bullish. Oh, they're just going to bounce it. Oh, that's such bullshit. Look at that. They get underneath them just barely. So hold on. Let me make sure that there's no sells. I'm just curious. Let's just see. If we draw the dark volume profile, I'm just trying to go by my process, right? Draw the volume profile to the high. These are huge waves, so I'm pretty sure we didn't beat it. Yeah. So to be bearish, I would need to get a sell signal that closes below that volume build. It does not happen. Look at that. I think I'm right fucking to it. God, that's pretty. Jesus Christ, that's cool. So yeah, to be bearish, we need to get under this and then see a volume shift. Instead, we get a high volume candle followed by a trap called a speed trap, which is the diamonds. And it's off to the races. Usually you're going to see a blue arrow here. There must have been, I don't know why it didn't work there. Kind of surprised to see how this yellow arrow shows up here right before the turn. We really should have gotten a blue arrow there. I'm not sure why it didn't show up. It must have just missed the thing. But see, once you've gotten this pullback that bounces, once again, you're going to start seeing shorts fail. That's going to fail. There's the arrow and the diamond failing. What happens right after it? More traps, right? Trap. Ah, there's that signal. Okay, so all three, diamond, colored bar, and the arrow. All three of them. All in the same bar. If it wasn't super bullish, that's almost always a pivot. It's also at the voodoo range level. So if I wanted to make an exception for when I want to be aggressive, that's a good spot to do it, right? What I'm seeing is that these are more likely to work when the bottom of this range is not a green colored bar, the 100 green bar. I know it's got an outline in green, but that just means that there's a trap seller at the bottom. But it's not a volume shift at the low of this, which means that this bar should be easy to break. And it's too bullish. They're not going to do it. And that's why we just don't take shorts at all, because even the really high, yeah, it gave you 15, 20 points, but it couldn't break the low, whereas these usually do, if it's bearish, right? Did they trap above it? Yeah. So that one is something I used to be, I was taking pretty consistently as well, because it got above it and then turned right around. And so even those high odds trades are just not working because it's so bullish. It's like the market gets so one-sided that things that were working 70+% of the time in balanced markets don't go more than 15 points, which is fascinating. And it probably also means that when we see that happen, when this doesn't go anywhere and instead it prints a green bar, you don't want to short the triangle and you do want to buy the green bar. You don't want to short the orange bar either. Because if it was going to be short, it's this. This is going to work. And when it struggles, we should be bullish. Because we're not breaking down under this wave. This wave should be relatively easy to break. Here, let me check. We'll do this one more time. Let me just see what the volume profile is here. This wave The volume is at the high. Easy to make an error here. So now any close on an orange bar below that volume build should be a short. So I mean that is a valid sell. I'm not gonna lie. Like that is just a straight up. It just doesn't continue. It does give you 20 points, but the only way you can't take that is if you decide you're not gonna short. Otherwise, it really should be. It should work 70% of the time. This is just the 25% of the time it's not going to work, is when it's just too damn bullish, right? And like I said, the signs it's not working, green bars aren't getting broken. Green bars aren't getting broken. You know by that point that this is going to break. And like I said, the hard part is how do you avoid taking that and that? I mean, I guess just awareness that this isn't going anywhere. So the volume building at the high here, when you have the VPOC at the high, let me just see one more thing. Where's the VPOC off the high? At the low of that. So once again, you're going to get chop. See that? Same exact thing we saw earlier. To the high, volume at the high. Off the high, volume at the low. I drew that wrong. So now, can I not flip you over? Okay, I'll draw it again. So now, price is going to get stuck in here, right? Unless we can get below this line, which does not happen. That's the only way, is to miss this one, wait for this bounce, identify that all the volume was at the low, and now we need a bearish close that's orange or a star with a close below that to really be bearish. To really be bearish, that's the only thing that would work. Now, what if we do this in reverse? It's off the high, but what if we use one of these old lows and we say, okay, I know it's bullish. Oh, it's such a big, so it's that. Hold on, I don't know if I did that right. That and that. So in other words, as long as we have green bars and stars above this one, it should be good. So these should be bought until we get an orange bar or a star under them. That's really the easiest way to say it. If it's bullish, don't short unless you break under a green bar. So yeah, that's the solution. Just don't fight the trend when you see it working. Now, once we know it's bullish, if you didn't get the green bars, what could you do? You could draw the triangles. Once you see a triangle, if it pulls back into that and bounces, you could take it. That one didn't work. This one didn't get a bounce, right? So we got to wait until we get above that. See how these triangles are right here? We need to, since we broke below it, we're developing volume below it, we can't buy unless we get above it, pull back, and get the signal. That's the long. Okay, let me just do that one more time. This is an idea I haven't talked about a lot because we haven't had a lot of trend days. It's not something Simon teaches. It's something I've figured out. Not saying it's better or worse. In fact, it doesn't work as often as Simon signals. It's the best way I've found to trade momentum with this system. Here, I'll do it on this one. Okay. Once you've identified, hold on. So on Simon's system, on his algo, once you've identified that it's bullish or bearish, right? So let's go back to the day this morning. We identify that it's bullish, right? Big bull move up. Here, it starts back, way back here. How do you identify that it's bullish? Easiest way, mark the wave or the power bar to the low. So here's the low, right? The power bar to the low is, this. Fuck that up. The power bar, and his are these little on these little triangles. Mine look like little flags. Power bar to the low is this. We need to get an orthodox close or a bar that closes with no physical contact above that, which is right here. Once that occurs, Pullbacks back into here with algo signals can be bought, and the chances that we break out is increased because that's the wave to the low, breaking out of it, right? Now we can start to mark off triangles up, which on his system is orange. And if we get a pullback into it that holds with an algo signal off of it, it's a decent buy. Not triangles down don't count. Okay, let's watch for an algo signal. It didn't fire on his. This is probably a speed bar on mine, but this is technically your buy, right? The bounce off of that zone. Okay. Let's see. Does it continue? Okay, triangle up. Oh, we can also here. No triangles up here, right? This triangle up. No pullback. This triangle up. It just didn't set up, right? No short, or no stop, just didn't set up. This triangle up. Okay, doesn't happen. Now they get under a triangle up. Orange triangle up. They get under it. Time. We don't want to be bullish. We don't want to be momentum trading until we develop volume above that triangle that got broken. Okay. So no buy, no buy. We wait, triangle, there. Same thing, volume above it, any pullback into the, here, let me just erase the lines. It's bullish again. Now, if you had a, this is technically a buy here, right? And so is this, and that's fine. But you can't, I should say, you can't buy the momentum trades. You can still buy the mean reversion trades when it's bullish. You just don't want to sell mean reversion when it's bullish. So there's the triangle, pull back, algo signal off the triangle, buy. There you go. Still bullish. Mark the triangle, bounce off, buy. No signal on his, but mine probably signaled. Triangle, buy. Okay. I know this looks so easy in retrospect. It is hard. Buy. Right? One of these is gonna fail, I promise. Buy. Okay. Buy the star. We're getting way up here on the channel here, and we're not breaking out. One of these is gonna fail. Buy. Okay. We finally have one breakdown. Now we need to get volume above this before we get bullish again. We do right there. Volume established above. Buy. Mark off the triangle. No. Okay, wait. Triangle gets beat, right? There's no buy, but we got behind a triangle. We can't be trading momentum until we get above that triangle. So we don't mark this one. Okay, got above the triangle here. Need a bounce in that range with an algo signal up. No algo signal on his, probably got one on mine. So you miss it if you're not trading with my system. Let's see. Okay, we beat a triangle here, so we're gonna hold off. Note that this triangle is no longer a buy zone because a triangle up got beat. But technically this one does work. That's interesting. So maybe you can still go to the next one. So here's a triangle. Buy. Right? Like, it's basically any bull signal. More or less. No triangle up. There. This green one, you'd have to find another way to get that green one. Triangle up. It's not above it. See, so that's not good enough. Okay, it's beat, right? Wait for volume to establish above. Happens right there. VPOC above that old triangle. Now we need to pull back into a triangle. Buy. Green. Okay, triangle. This one stops out. Wait. We need... Okay, now this is a mean reversion buy, so you can buy this. Triangle. Okay, so we bought this, got paid, pulled back, got underneath it, got to get above it, got to get above it. Nope. This one is pink, so it doesn't count as getting volume above it. So now we're in balance. No more momentum trading to the upside. If you think it's bearish, same fucking thing. Right? Here's your triangle. Get volume below it. Come back to it. I'll go signal down, sell. If you think it's bearish, sell. Sell. Triangle. Pull back into it. Star, sell. Stops out. Wait till we get volume below it. Happens right here. Pull back into it. Doesn't happen. Triangle. No algo signal, just didn't fire. Triangle. No algo signal, just didn't fire. Purple bars aren't good enough. And no firing. And now it looks like it's getting bullish. So I think you get the idea, right? You can literally do that all day as long as it's trending and you know the direction you want to be. That it does work. It does work. So anyway, we saw that. Now this is overnight now, right? And we saw that it was bullish into the voodoo range level. They tried to reject 11,434 and they failed to reject it. Are we going to be selling? No, we're going to ignore them, right? We can also see that we're having a really hard time getting any bars to break down below the midpoint. Probably a good reason not to be bearish. What should we be doing? Probably marking off triangles and buying bounces off the triangles. Buy. Right now, here's that heavy signal again, right? Orange bar, diamond, arrow, right? This is usually a really good signal unless it's bullish. Is it bullish? You bet it is, right? Not gonna fuck with it. Now, what I want to know is, does this location become important? And I bet you it does. Notice that the retrace through it, the trap trade also traps with a speed trap. That's probably going to go higher. Now, what I want to know is when we establish volume below this bar, when we actually get a VPOC down here, do we start to get rotations? Okay, this is just a diamond, a pink bar, and an arrow, but it's in totally the wrong spot. I'm guessing that that's going to get trapped. Let's see. Look how they just turned this into a chop zone, right? Tons and tons of volume, tons and tons of aggression going off here. There it is. Oh, but it's not green. But you get star, diamond, arrow. I'm pretty sure after all of this that that's probably good. If I draw the DVP here, that's the high, right? Yeah, you get a star off. So this should be a scalp to the downside. We can't get volume below this. So that is important. That's fantastic. I'm so glad that that failed. Look at this. So here's the idea. It's bullish. We get a high odds sell signal. We're going to ignore it. Even though it did give us 20 points, I'm a conservative trader. I'm going to ignore the entry. I'm going to mark the area, right? I'm going to say, I see it's bullish. It's probably still bullish as long as we can't get volume developed under that. If we do get volume developed under it, I can be bearish. We get a high odds buy signal, right? It's in the wrong location. We can mark it off and expect, since we have a high odds sell signal and a high odds buy signal in the same place, basically, right, within 20 points of each other, this whole zone needs to be negotiated, and we can join the team that breaks out, right? They try to go under it. As soon as they put a VPOC under here, comes right back bullish. That's our first sign that we're probably going to get continuation, right? And we have diamond trading into diamond. This is a good trap trade right here. This is a good long for a scalp. We get our 15 points. We get above it. We get volume above it on a bullish bar. It should be bullish, I think. But as you can see, we get this here. Now, this orange bar is at the apex, but it's not under the volume build. It's not good enough to be bearish, but it probably does turn back and test this zone again. Let's see. Tries, Yeah. See, all they needed to do is get a VPOC on a bullish bar to be up here, and that's all it took. All of a sudden, this guy, even though they traded underneath him, all of these big heavy sellers got trapped. They tried to save it, they failed. Purple bar, star, see ya. Look at that. That is fucking cool. Okay. Now we extend higher, right? Notice there's no more. The pink was over and over and over again coming up. It showed up right here in the middle and it went away before the end of the bar, before the end of the wave. This is the first sign that we probably want to start drawing DVPs to the high and off the high, marking off high volume areas and noting where volume needs to get, where sellers need to show up for us to start to get bearish. Now the problem is this was the VPOC, but look how big this volume build is. So I'm going to mark this too because I bet you that volume build up there becomes significant. Let's see. This one does not get below this VPOC, not a sell. This one does not get below that VPOC, not a sell. Notice that they try to get underneath it, come back with a green bar. We did trade gently underneath the green bar. This one was not an apex. This one was a trap back in. If anything, because it's been bullish, this is probably a buy, but I don't know if they're going to be able to break this high volume area. I'm guessing no. Okay, they can't. Right? So that's, again, we saw this today. This is early in the morning. We saw the exact same pattern today where you have, let's see, where you have a push higher with a volume build, a VPOC at the low or at the mid, but a volume build near the high that becomes significant. See how they can't get into there? So it basically means that the longs on pullbacks, even into the triangle, I bet, just won't work very well. But the shorts are so hard to set up because you've got this volume build down there. So you're going to need to get volume below it, like that, and then get algo signals. Now, what I don't know is what happens when we come back into this heavily contested area. Are we going to get a bounce here? Oh, there's that signal again. Arrow, diamond, colored bar. And guess what? It lined up perfectly with arrow, diamond, colored bar. And we bounce. So that's a consistently good signal. But we've gotten it underneath. We've gotten volume underneath all the volume up here. We came back up and got a star down. I would think, unless it's really bullish, that should create a scalp. It doesn't. Why? Because there's volume up here and liquidity. And because of this. Trapped sellers with a high odds buy signal occurring right at the top of it. So again, the higher time frame is too bullish, right? And even though they're trying to defend this lower area, which is what they need to do to push through here, they can't get through this because it's not bearish enough. Arrow followed by with a diamond and a colored bar within 2 bars. Higher. Where to? Probably the volume build. Oh, they trade right through it. Try to reverse. Now it looks pretty fucking bullish. See all this pink? Not shorting this. I'm not shorting this. This. Not going to short that. Right? Not after this worked. And this worked. When those are working, I'm not going to short. Okay, we get up here. They trade behind this. And they just see how the green bars just can't hold. They can't hold below these green bars. They get below it, and they immediately come back with another green bar. Every time they push price lower, volume shifts higher. That's bullish. Now we get an orange bar at the top and a green bar at the bottom. This is your chop zone. Notice we got the arrow here with the orange bar. That should be a good scalp to the low side, to the downside. It's just, I wouldn't do it because it's so pink here. There's so much volume and so much momentum, and we're not having any success holding price below this midpoint. See that? Every time it hits the midpoint of the channel, boom, bounces back up. There's just no reason to even take this short. Why fight it? If you do need to get a trade, at least do it this way, where you have a triangle, pulls back, buy the green bar, triangle, pulls back, buy the star, right? trade it with the trend. Frustrating because I miss some of that, and I'm focusing on things like this, thinking I'm trying to get retraces back, and I'm getting them, but they're so hard, and then I'm missing out on these other trades to the upside. So once it gets really bullish like this, I just need to go back to more of a one-sided trading technique. Okay, there's a yellow arrow all by itself. Pink goes away. Oh, it came back. I don't think I could. That's that same signal. Does it work? Yes, it does get me a nice little pullback. Let's see if that area becomes significant in the future. Because like I said, I don't mind skipping it as long as I can maybe get another opportunity on the other side of it. See, they came down, they got under a green bar, immediately came back with a green bar. I don't think that's going lower. They do it again. Arrow, orange bar, star. Three of these all together, right in this same location. They trade behind it. They're trying really hard to take that level. And they do it. Okay. So they got the first sign of something was not right. They traded underneath the green bar with more than one bar. They tried to come back with a green bar. They get back into this area. We get another heavy sell signal. Right? Notice that they've gotten back into the channel. They try to get out of the channel. They immediately come back to the channel. The other way to think about this, draw the volume point of control. Draw the volume profile. Where is the volume? The volume build is right here. Do we get an orange bar that closes below that? Yes. This is your entry. Right? So this one was the highest odds entry. It gets a pullback. It worked, right? We might have missed it, but we got an arrow suggesting capitulation or overextension, and then an arrow with an orange bar and a diamond. High odds setup as long as it's not bear, as long as it's not bullish, it works, right? This bar was green, so we might not be able to break that low. We get another bear bar. We're probably balancing. Another bear setup, I mean. We do break that low. They trap back in, and it goes back to being bullish. Or maybe it just goes balanced. One way or another, I'd probably favor the bulls here. But that could be wrong. Yeah, so like this is your first on-process entry after that. Unless you want to take pink bar star, which also gave you 20 points. This looks like balance. Yep. 20 points. 30 points. Another entry, 15 points. Right? Green bar all by itself, not good enough if it's not bullish. Green bar followed by diamond, sell. If it's bearish. Gets you a little bit. Purple bar, green bar. Trap underneath a diamond, come back with a second diamond. That's a buy. Right? Now, this is the first one where you really get a potential fail, and that's if you tried to short this, even though it wasn't the apex. How would you know not to do that? Probably by drawing a volume profile at the high, which I believe is there. I believe this is the high. And then this is off the high. So what it's saying is you would have to take a short only if it traded below those. That one did. What about if this was the high? I don't know which one is higher. If this was the high. This is definitely the stronger move. Then you've got one off the high here. It's pretty much in the same spot. And a volume build there. So let's see. Now we've got, yeah, this one. So again, this is when it's really tight and it's been bullish, it may not be a good idea to take those trades. And oh, now once it signals, I wonder if the trap back in works. Yep. Fucking hard, man. That's tough. I got stuck in this. This is today, right? I knew it was bullish. I knew not to take shorts. Some of them worked. I took this one. It stopped out. It came back in microseconds. I didn't fire here, right? This one was valid, it looks like. This one is better, but I didn't fire right away because it was so fast. It traded down here. I thought I missed it. and I was frustrated with myself. It technically came back and gave me another opportunity, and it had a star. I believe this is a good short, even though it didn't go very far. I believe that's a good short. But now you can see we're in balance, and we're starting to trap traders at the highs, right? Trying to trap traders at the highs. I was not catching on with the fact that these green bars were getting beat. See how we keep trading underneath them? The orange bars are at the apexes, and we're not trading above them. So in other words, this is our deciding factor here of who is in charge, is we have to start beating orange bars. And so when that doesn't work, oh, okay, it does. And then it comes right back into this location. Comes right back into this high odds location. Gives us a trap. And they flush. It was tough. It was tough. Right? It was really choppy, but these green bars getting broken. Green bars getting broken. It's a sign that we're probably balanced, if not bearish. And so you don't want to be liberal with your entries. And it's okay to take every trap to the downside, which is this and this. Trap as in it breaks a red line and then comes back down with an algo signal. So that one's a good short. Right? This is a trap to the long side. That's a good long as long as it's balanced. This one I skipped. And the reason I skipped it is because it didn't break a line. But if you look, if this was the wave to the high, back here. Well, here, you know what we can do? We can do we'll just do the volume profile for the whole thing. So this whole thing to where it started to break down was this. So if we can get a short signal, specifically an orange bar, to close below that. Now, you do see that it's got a ton of volume here, so it might not work. But generally, when you get orange bars closing below that, that usually works. It had such a big volume build that it had to come back up. This one was hard to take. This one's a little on the low side, right? So that one doesn't work. That one is perfect. Interacts with the high volume area and closes below it. That's your ideal short. And I skipped it because I wasn't thinking about things in a higher time frame. I was thinking I wanted to buy longs as long as we were trading in both directions. And then the problem is that now we have an orange bar at the apex with all the volume above it. And so even though this is a high odds trade for the long side when it's balanced or bullish, it is no longer bullish. And I can tell that because I've got purple bars increasing or staying the same in number. So 2, 2. I can't take any trades here that are long for the same reason as I couldn't take this one to the short side. It's a good trade that works as long as you're trading with the trend. When you're not trading with the trend, those diamonds don't work anymore. Those diamonds need to be ignored. And same with the arrows. Even trapping underneath the arrows are just not as good unless you're at least balanced. But what I should have seen is I said I'm not going to take that because it's not bearish enough, that diamond. And when that diamond works, when this diamond works and this diamond fails, I need to accept that we're going to need to break back above this for it to be bullish, right? So while this scalp is fine, I should not expect it to go higher unless it can break above here. So this I should not be buying. It's just, even though it worked, I don't think I should be buying that. We do trade above it, right? And then we get choppy here. I took this short. It's okay. It's not great because we traded above this guy with volume above it. This right here signals that buyers are trying to take back control, and I should be buying dips if this would have had a diamond or a star or a green bar. It just didn't get it, right? This one is definitely not a short. And then we got out of the area. Now we can assume it's balanced or bullish, but the trapped traders are still up here. And so when we return to that zone and get a trapped trader signal, which is this diamond, it's probably a short. And if you miss that, You can draw the DVP, draw the volume profile. Ooh, that's right. Now I remember this. This was tough. So the volume on this, you had to wait because you had volume down here. You had volume down here that you'd have to get under to really be bearish on a higher time frame. And you had volume up there. So this one was good enough for a scalp, but your target is to break down here. You don't expect this low to break. And when it does and it comes back into the star, I knew that was a buy and I didn't take it. I was ready for it here and then I started getting distracted and I missed this one. So that's a good scalp there, right? The wave to the low gets traded above, right there. Here, I'll show you. So the wave to the low here. This is that we looked at this overnight too. The wave to the low. Oh, I'm wrong. The wave to the low starts way up here. That sucks. Wave to the low starts way up there. Darn. Okay, never mind. I thought this was the wave to the low, but it's not. So the only thing you could do then is you could draw the volume profile off this low, identify this level, and say you need price basically above the voodoo range level, like this, and then you can take green bars that interact with that or stars. So that's your long for the scalp, right? But it's still balanced unless you can support above this. Then you've got diamond, which is not an entry, but I took it. Diamond gets trapped back in with the star. That is the long. So I was too conservative on the downside here. I wasn't prepared for this move, and I wasn't prepared for this move, and I should have been. And then I'm okay not taking this and this. That's not that big of a deal unless you had a location here, and this one didn't quite reach my location. So I'm okay with that. I don't really think I should have taken this short. Honestly, that's not that good, but I should be willing to take this one because now it's balanced. And then here, I definitely can't buy this all by itself, but I think that this one is actually okay because of the fact that we've got volume above the VPOC on this move back up. Your target is back here. That's a scalp. It turns back around. We get the trap back in. That's your scalp to the long side. It trades up higher. I got a good piece of that. Market closed like here. I think I got this. So I got a good piece of it. It did go higher. A green bar has been traded below. Right? That's not good for buyers. This high and off this high. The volume builds are here, way at the top. That's scary for buyers. And here, this is your short. Fuck. Just missed it. So if we return to that area and reject off of it, right here, I can short it. Or if we return to this and reject off of it, I can short a break below that. So I know that was a little bit convoluted, but I just wanted to show you like bar by bar, like that's the ideal way to trade it. I did not trade. Looking at that, I missed the trades I should have been focused on, and I took some trades that I shouldn't have. If I was going to be aggressive with like these, I should have been taking this and this and this, right? And thinking it's bullish. And then if I'm going to wait and not take this, which I think is fine, I need to be okay taking these and these. I can't just assume the entire day is going to be bullish, and I definitely don't want to be taking these when this works. Though that's where I made the big mistakes. This one is just a little bit too aggressive. If I'm going to be aggressive, I should be aggressive to the long side until we reject off of a important area, and then if I miss this one, take that one, right? This is just a bad entry here. Shouldn't have taken a stop there. I should have immediately exited when I noticed that it was wrong. And then this is a fine scalp, right? And then coming back, if I was watching the live market, this is the short off of this rotation. So that's that. Yeah, good to know. Definitely not one of my better days, but good to see that the places I need to adjust is basically being aware of, do we have momentum? A, B, when that momentum goes away, am I willing to trade both directions? And how quickly can I flip back and forth? And if I'm not flipping back and forth very quickly, I need to not be aggressive, basically. If I'm not performing well with the conservative trades, I need to be okay skipping the aggressive trades. I can't take the aggressive trades and skip the conservative trades. Not okay. And then if it's going one direction, I can be okay taking more aggressive pullback